Hello and welcome to BISP Solutions. This is a series of webinar on fixed asset basic configuration in eBusiness Suite. Today's agenda, that is day 5. Today's agenda is define the book control. We will define the corporate book out here. You can have a corporate book, tax book and budget book. So we will define one corporate book out here, and then we will define asset category, right? So we will assign the asset category to the book, right? So that is the today's agenda. Before going today's topic, let us quick recap what we have seen in the day 4 session. In day 4 session, we had defined the pro rata retirement convention. We have created mid-month and another one as following month as our pro rate convention. And then we define depreciation method, that is straight line method, and another one is net book value method. For more details, you can watch our day 4 webinar. So let us move for today's topic. So defining your book control in corporate book. Using the book control window, you set up your depreciation book. You can set up an unlimited number of independent depreciation book. Each book has its own set of accounting rules and accounts, so you can organize and implement your fixed assets according to policies. So you can define unlimited books, that is depreciation book with accounting rules and accounts as per the fixed assets accounting policies. When you define a tax book, you must specify associated corporate book or say depreciation book. You can mass copy the asset and transaction from the source book. The source book is the corporate book or depreciation book into your tax book. You specify the current open period and initial mass copy each assets into the tax book. When you create the tax book, you have to do this from the corporate book. As of the end of fiscal year in the corporate book, it is required step. If you skip the step, you will not able to use the Oracle asset. So it's a mandatory step you have to follow. The performance of this step is once per ledger. So asset book, you can see out here there are corporate, tax and budget, right? So there are the tax book is, you can say, dependent on corporate book. You define in the tax book a corporate book, or corporate book you can say, or depreciation book you can say. Both are the same. And the corporate, as we had discussed also in a previous session, the corporate book is governed by corporate laws and tax book is governed by the tax rule of any country. Right, so and asset calendar is assigned to that asset book. Right, so let us start with that. So here is the navigation we had to take as setup system, asset system, book control. So this is the navigation path. So to define your book control, you use the book control window to set up your depreciation book or corporate book. You can set up an unlimited of independent corporate books. Each book has own set of accounting rules and accounts, so you can organize and implement your fixed assets accounting policies. Right, so when you define the tax book, you must specify associated corporate book, and you can mass copy the asset and the transaction from the source book into your tax book. You specify the current open period and initial mass copy of each asset into tax book from the corporate book as of the end of the fiscal year in the corporate book. So you can define the corporate tax budget book. You must set up your depreciation or corporate book before you add asset to them. You can set up multi corporate book with create journal entries for different ledgers or to the same ledger. In either the case, you must both run depreciation and create journal entries for each depreciation book. For each corporate book, you can set up multiple tax and budget book that are associated with it. So the navigation will be set up asset system control book. Let us log in to the application and see how book asset book is created. Right, so let us move to there. Let me log in. I will select my responsibility as Asset Vision Operation USA. So my navigation will be set up asset system book control. So you can see the book control form is open. Let me close and re-navigate again. So this is my navigator, that is Asset Vision Operation USA, and the path is Setup Asset System Book Control. So we have to give our book name. Let me give the name as XNX crop book. You can see associated corporate book is auto populated now, since I am taken the class as corporate. So class is we taking as corporate. First we will create the corporate book, or you can say a depreciation book, and I will give the description of that book. I will give that description as X and X book, and out here I will allow purge while importing the data from interface, right? So when the book name should not contain any special characters, you should make sure of that, and the name should be appeared in the list or window, which is allow no more than 15 spaces. So you want to limit the book up to 15 characters. So it is a 15 character window is there. Beyond that it can't take, right? So let us move ahead of that. Enter the ledger for which you want to create journal entries and allow journal posting. If you want to create journal entries for this book, you enable that, right? By default it is allowing. If I, in the case of budget or tax book, I will not allow GL posting, right? So if I allow in the tax book as a GL posting, any entry which is already been processed using the tax book, again it will duplicate. So one should take care while class selecting as tax, you should not allow GL posting, or while selecting as budget book, you should not allow GL posting. Let me select my ledger. My ledger is vision operation. That is vision operation USA. And my depreciation calendar, I will select my depreciation calendar. So we have created our depreciation calendar. Here we are, XNX, select that, and pro rata calendar is the same. Now what is the current period? So my current period will be the January, as my first period is January. Let us 21, sorry, that is 22, January 22 right? So you can open the period from January 22, or you can start, say, from 23. Right? So that is my January 23 is my current period, and divide depreciate evenly or by days, right? So what is the use of dividing the depreciation evenly? Choosing the evenly to divide the depreciation evenly to each period, and if you choose by day, to divide it proportionately based on number of days in each period. So that is the usage of dividing the depreciation. And depreciation if retired in first period, I will select that. So choosing whether the depreciation in this book that is retired in the first year of life. If you select that, you can do so. If you uncheck that, you can't retire the asset within a year when you place in service that asset, right? So that is the check mark. If you disable that, if you not enable that, you can't do that. So it's a business decision what configurations they required. Accordingly, we configure the application. So let us move ahead again. So accounting rules, moving to the accounting rules tab. So you can see in the accounting rule tab, to allow amortization changes in the book, check allow to amortize the changes checkbox. To allow to choose the allow mass changes, to allow mass changes checkbox in the book. So I will select that allow mass changes, and capital gain threshold is select 1 and 0 month. I am selecting that. Enter the minimum time for your must hold the asset in asset Oracle asset to report it as a capital gain when you retire it. If you want Oracle asset to report a capital gain for all assets when you retire them, then 0 for the threshold, right? So that is the usage of capital gain threshold. If you hold the asset for less than threshold, the Oracle report it as ordinary income. If you choose to allow revaluation, specific revaluation rules, so these are the allow revaluation rules, right? So revaluation, accumulation, depreciation. What is that? If you do not revaluate accumulated depreciation, Oracle asset transfers the accumulated depreciation to the revaluation reserved account up to valuation. Revalue YTD depreciation. Check this checkbox to revalue year to date depreciation. Retire revaluation reserves. Check this checkbox to retire the revaluation reserve. amortization, revaluation, reserves, check this checkbox to allow revaluation reserve to amortized in this book. Revalue full reserved asset, check this checkbox to revalue the full reserved asset. Maximum revaluations, enter the maximum number of times an asset in this book can be revalued as full reserve. If you leave this field blank, Oracle asset does not limit the number of times you can revalue an asset as a full reserve. Life extension factor, enter the life extension factor for full reserved asset in this book. Oracle asset multiplies the life extension factor for the asset origin life to determine the asset new and extended life. Life extension ceiling, the life extension ceiling limit the depreciation adjusted when the revaluating the full reserved asset or say assets. So I am selecting the retire revaluation reserve, that is B I am selecting by default, and choose the allow group depreciation to allow group asset to be added in this book. If you choose to allow group depreciation, specify this group depreciation rule. Then you have to allow the group depreciation rule. So I am selecting that. I am selecting allow CIP depreciation in the group asset. Check this checkbox to allow the depreciation of a member of CIP, that is capital in progress asset cost. So I will allow this and allow this also. Allow intercompany member the check, allow intercompany member asset assignment. Check this checkbox to allow the group asset and its members assets to have different balancing segment values. If the checkbox is not checked, the group asset and each of the member assets must have the same balancing segment values. So I am done with that. Let's move to the natural account. So here we had to provide account codes for the retirement account, proceed to sale. Let us provide the account. So let us provide the account, say gain on let me select that. Yeah, the gain on retirement proceed of sale, I will select that. Similarly, I will select the loss also. So loss on loss in retirement proceed of sales, select that. Clearing, that is clearing account we had to provide, that is proceed of sales clearing. And then we will provide cost of removal. So let me provide the codes, that is gain on here we are, gain on retirement, cost of removal, select that. Out here I will select loss, say OK. Now I'll provide cost of removal of clearing. So let me provide the account code for that. Cost of net book value retired. Let me provide for that also account code. So gain on this is the account code. Now out here I will provide the loss also. Revaluation reserve retired, so I'll provide the code for that. Let me provide the code. So it will be a same. Now deferred depreciation reserve, I'll provide the code for deferred depreciation reserve. Drag it down, it's not taking that way. This is the account. Now again I will provide the deferred depreciation expenses. This is my account, and depreciation adjustment. That is EP. This is the account. The account generator default. So enter the account generator default segment, values for your book journal entries. So by default, the Oracle asset creates journal entries without cost center level, detail for all account except depreciation expenses account. Using the default segments, it creates journal entry using the balancing segment from the expense account in the assignment window and the account segment from the asset category book. Depend on the account type, the Oracle asset uses the other segment from the default segment values you entered for the book in this field. So let me put the default values. So 0001 is my operation. Department is this, and I will put I will say OK, and then I will save the same. So we have provided the GL posting. My ledger is my vision ledger. So book is attached to this ledger, and using the depreciation calendar and fiscal year attached to that calendar, and giving the first open period, what is my current period, first open period will be out there. You should put the first open period as per the business requirement. Divide the depreciation evenly, and then account rule. Accordingly, you provide the account rule. Allow mass changes. I just uncheck this. I want to uncheck this also. Allow cost sign change. I don't want that. And allow revaluation. Retire the revaluation reserve. Right? So that is check mark. We have checkbox. We have checked it. And then allow depreciation, allow CIP members or group of asset, allow CIP depreciation in the group asset, allow members asset to tracking, and if you want, you allow the intercompany member asset assignment. Check this box. Then provide the account. Right? So this way you will create a book. We have created corporate book. Right? And now we will save the same book. So from here you can save or Control S. So I will save from here. So it has been completed. You can see the status is been completed. So we have defined our book control. Now, so we have done with the book control now. Now we have to attach the asset category to the book. Right? So this is the last step of our configuration. So we have created values, category values, location values, and asset key values, and we have created fiscal year, calendar, prorate retirement conventions, depreciation methods. We have created 2 depreciation methods, and we have created a book control, that is corporate book we have created. The last step is to attach asset category to the book. Let us move to the application to see how the asset category is attached to the book. Let's take the navigation again. Setup, asset system. If you go scroll down, asset category is there. Just open that. Here we will create asset category. Right? So let us set up our asset category now. Asset category information is common for a group of asset. Oracle asset defaults these depreciation rule when you add an asset to help to add asset quickly. If the default does not apply, you can override many of the defaults for any individual asset in the asset detail or book window. Use setup default values for each category in each book. The default depreciation rule that you set up for category also depend upon the date, place in service range you specify. So let us create asset category. So our major category is, say, computer 1, and we have created desktop, laptop and tablet. Let us create one by one. Say desktop, say OK, give the description. So computer desktop, I am saying non-leased and owned. So out here you can see the property type. You can provide property type as real and book. So you can have your book which we have created in X and X. Just search with that. Here we are. Now I will provide my asset cost, the account code for asset cost. Let us provide the account for asset code cost. Say department 00, and my asset cost for computer, I will select computer. So computer and software, this is my asset cost, and say OK. Now I will provide the asset clearing account. And account as asset clearing. So asset clearing, say OK. Depreciation expenses. For this asset, say depreciation computer software, computer and software. Accumulated depreciation. Here we are. So accumulated depreciation on computer and software. I am taking this. Say OK. And revaluation reserve. I will select the revaluation reserve account also. Revaluation reserve account. Revaluation amortization account. If you do the amortization, these accounts are required. Revaluation amortization. Then capital in progress cost, we have to provide the account also. Let us provide that also. CIP cost. Select the CIP cost, say OK, and similarly provide the CIP clearing. Impairment expenses. select that impairment expenses. I will select this machinery and equipments. So I am selecting that impairment. Accumulated impairment. So I will select the accumulated impairment. Select that same. Now we will select the default rule. So let us, the place in service date, it is coming from system options. The options we have already discussed. The oldest date, place in service of your asset which you have defined. So system control, basically it's a system control where you define this, the oldest place in service date of an asset, defaulting from there, right? So if you don't want to depreciate this asset, you can uncheck this checkbox, so that asset will not be depreciate when you calculate the depreciation of this asset. So if you want to depreciate, then you will check this box, right? So I will select as depreciate this with my depreciation method which we have defined, that is X and X. Let us search with that. We created two methods, that is, one is straight line method, another one is net book value method. Let us select the straight line method, right? So that is, we will select that and we will define this as for say 5 years. So let us take a 3 years. So we have defined with the 5 years. So it is taking with that straight line method, we have defined it as 5 years. We have not defined any bonus rule. Now let us move with the prorate convention. We have created our prorate convention, that is mid month and following month, right? So yesterday's session we have created the mid month and following month. Let us take as mid month. And the salvage value percentage, if you want to have a salvage value percentage, let us give a salvage value percentage of 1%. That will be the salvage value. And other things I am okay with, done with that. So let us save the same. And now save the same. So you can see this is my category, asset category, which is attached to my book. So whenever I run the depreciation, this asset will reflect that category, that is computer 1 and desktop. Let us create one more asset category. So another category is machinery tool. And we have created MC21 tool set select that, say OK. Just hold on. Let me select another one. Say OK. That is machinery tool MC23, machinery MC23 tool set. As non-lease owned, and I will provide my book. So I will select as XNX as my book and provide the asset. Quickly provide the asset cost. Let us provide the same 00. I will select the asset as machinery. Let me select 1530. Yes, 01-00-1570-000- I will quickly provide the codes. Right, so let me complete this. Revaluation expenses, revaluation reserves, sorry, that is revaluation reserves. I will provide the code 1670 and revaluation amortization. So I will provide the code for that. Amortization is 1680 and clearing, I am selecting the clearing, CIP cost clearing 1580. Similarly, in the CIP clearing, I will provide 1590. Impairment expenses, I will provide the account also for impairment expenses. $7,335. I'm providing the same. And accumulated impairment, I'll provide 635. And default, I will select the method XNX, net book value method. Right, so basic rate is 10%, so 10% is there. Say OK. Adjustment rate, adjusted rate is 10%. Default salvage value, if you want to have, you can give, or say 0. So let us give the salvage value of 3% as my salvage value. Right, so I'm done with that. Save your work and then save your work. Okay. we have not provided the prorate convention X and X. Net book value 10%, adjusting rate as and prorate calendar, say following month we are providing, and the salvage value we are providing 3%, and save the same, right? So, and now save the same, right? So we have done with the asset category. So we have provided two asset category having a different depreciation methods and prorate calendar also, different prorate calendar also. Now, so we have done with all the setups. So we have ledger setup. So we have the book control is attached to our ledger setup. So this is ledger we have attached, and using the book control, the fiscal year and calendar is assigned to the book control also, and the asset category, you define your depreciation method and pro rata conventions, and out here you use your category values through category key flex field. While you defining the key flex field, so you define your category book. So attach your category to the book, right? So we have seen that. So that's it for today. In the tomorrow session, we will see the transactional of fixed assets. So thank you for joining the session. That's it for today. I hope you enjoyed this session. Thank you for all. Thank you.